So, Chief, I think covered many things. Like I have listed down, but I think there are three, four items which are currently in play, which your crypto versus AI, individual AI as well. Do you think AI will trigger some sort of recessions? As you rightly said, also it's not still here. Yeah. But maybe your assumptions over a period of time. Do you think that AI can trigger recession? Another item is which are the sectors will be they are more prone to risk because of AI?
There is some parallel to the 2000 boom and bust because that time also I think the underlying technology did well, internet eventually, but in 2000 the expectation and valuations went up so much that even though internet did well, the stocks fell 70-80%. So वो देखो risk है मतलब I am too small sitting in India to define how big that risk is. Basically, there is a lot of infrastructure of AI being built. It needs some apps to come up where the usage of AI goes up. Right now, most people are using search in ChatGPT, Perplexity, and all. That will not be enough to use the kind of capex that all these guys are doing. But one difference I see is that time the companies doing capex and which were valuations were very high were much more risky because I don't know if you remember we used to have pets.com and webvan and all that. वो बड़े fragile companies थे. Good part is apart from OpenAI, actually all the other guys have solid revenue streams and as a part of their market cap, the capex is not very high. Like if you see, let's say, Microsoft, right? 3 trillion company doing 10 billion per year, not going to spoil their balance sheet totally. So I think some correction can happen in US tech, but like 2000, will it lead to a global recession? I am not of that view. And also, I think obviously with time the adoption of technology is faster. So maybe what took email and chat on internet years to get users, the apps may actually scale up faster in AI. So hopefully we may see a correction, but I still think US top 5, 7 companies are worth having some exposure to because the PE multiples are not very high and their technology is obviously solid. The second risk is for us as Indians, as I said in the presentation, कि देखिए between service exports and remittances, we get about $300 billion per year. And that to me is actually the only big export we have because अपना जो दूसरा export है जैसे we export gold and jewelry but उसमें क्या है we import gold do processing export value addition is only 20%. Actually even in the PLI schemes our value addition is only 20-30%. So we are importing all the components of a mobile, assembling it here and sending it abroad. So when you see our service exports remittances value add is 100% because there is no raw material to software exports, etc. Now, if AI starts impacting that growth, and already you will obviously be aware that IT sector का derating हुआ है थोड़ा, stocks have not done well. Question is, does it spread to BFSI work? Does it spread to accounting work? Does it spread to auditing work? No one knows. As I said, obviously, agar AI adoption is very fast and lot of jobs get lost, then we will definitely suffer as an economy. But again, I think generally what happens with technology, it kills some job and creates new jobs. So hopefully this will be again one technology wave which will also create new jobs. Because people will have to implement AI. So you may need IT consultants who know how to implement AI in a corporate. So I would say 5% risk that India has a problem because of AI. 95% I am assuming it is just a normal new technology where some people will lose out, some people will win.
Yeah, thank you. I think you have a good dollar theory, like, so if you can really touch upon that, I really wanted to see your latest view on that side.
No, I am actually very negative on the dollar. Question is against what? Because I think yen and euro also have problems. So obviously, I think against gold or Indian currency, I think Indian currency will do better than it has done in the past. See, देखिए last 40-50 साल में average rupee has lost 4% against dollar every year. I will not be surprised if next 5-10 years we are almost flattish versus the dollar or lose 1% per year. Because मेरा simple view है कि एक equation है economics में कि nominal GDP growth has to grow more than primary deficit and interest rate for debt to GDP to be constant. So I'll explain this basically. Let's assume you start with 100 rupees of nominal GDP growth and 100 rupees of debt. In 1 year, your primary deficit क्या है? Government का deficit before interest cost है. तो वो साल में समझो 3% है US का भी. So 3 rupees you accumulated debt by expenses being more than income in this year. So that is 3. And because you have 100 rupees of debt, and let's assume you're paying 4% interest on that, आपको वो 4% भी देना है. तो आपको right hand of that equation, primary deficit plus interest cost is 7.5% for US. And देखिए mature economy के लिए अभी 7% growth is virtually impossible. मतलब इंडिया का ही 9% growth है. तो if I take again a long-term view, it looks very difficult for US debt to GDP for not going up. It will keep going up. And also when you see the politics around it, they are still doing tax cuts, they are still spending on wars. There is no political will to reduce the fiscal deficit. तो अगर आपका debt to GDP ऊपर ही जाने वाला है और 100% क्रॉस कर चुका है, it's 120% now. My simple view is that what happened to Japan 20 years back will happen to US next 20 years. Finally, Fed will have to buy the bonds because no one else will buy such large number of bonds. Today, I think US will have to issue about 1.5 trillion bonds per year. When you see the geopolitics today, China, Saudi, Germany, who are current account surplus, they don't seem to have trust in US, which is why everyone is buying gold. तो आप देखोगे कि every central bank का gold holding अभी ऊपर जा रहा है, including India. Now, in that environment, आप 1.5-2 trillion bond issuance कर रहे हो, तो clearly, I think at some point, Fed only will have to buy these bonds, which is again what happened in Japan. And when that happens, your currency will start to depreciate. Which is why also my view that while all risk assets are expensive, whether it is Indian equities, global equities, gold, silver, we need to have asset allocation. I keep saying that we should be totally at extremes. Either have BAF, ESF, arbitrage, or have small cap, innovation, financial services kind of products, because अगर dollar depreciate करेगा तो risk assets will do well. So your right side of the portfolio should do well. और by chance कुछ crisis, कुछ capital control आ गया. See, other way governments will manage is put capital control saying we are closing all gold ETFs, we are closing all silver ETFs because we want money to come into government bonds. That is a very extreme, but it has happened in the past. Like in 1930s, US stopped people from buying gold, 1933 or something. So we are all assuming that will not happen, but that is a possibility. But net, my issue is that And what I've said is actually true of France, Italy, everyone, right? I mean, that's what Japan, Europe, US, all are in the same boat. I think what makes sense is having a mix of risk assets and having very safe assets. बीच में रह के कुछ फायदा नहीं लगता है मेरे को.
Hmm. Yeah, matlab, again, we are putting US because I think it holds almost 2/3 of the world's
Yeah.
market cap.
Correct.
Like, and again, the economy is there. So, is there any disconnect do you find? Like, if tomorrow something happens, because everything is in extreme.
Yeah.
Your debt to GDP is extreme. Like your stock markets is at again extreme. Matlab, it has done exceptionally well, basically. Again, 1/3 of the market cap, US market cap, is basically again tech
Yep.
holds that. So how do you look at this setup? Is there anything worry you where you think, or no need to?
A lot of things worry me actually. One is like if AI capex flops, then like 2000 we will have a meltdown in US, which may pull down all markets also. The second thing I worry about is capital controls actually, because as I said, if governments are under stress and for some reason Fed buying bonds also doesn't pull the yields down because others start selling, then they may have to do capital control, which can be very scary. Third is I worry about AI impact on India. See, finally, I think the biggest worry is outside economics, because we are living in a world where inequality is going up, and unfortunate part is technology is always inequality producing. मतलब वो top 5-10% only will do well, because आप सोचो, when Make My Trip comes, thousands of small travel agents lost their jobs, right? When Zomato comes, the profit of a lot of small restaurants moves to Zomato, right? That is how the platform make money. So technology, whether it is robotics, internet platform, AI, obviously increase inequality, and the chances of social unrest will go up. So it's not economics actually I worry more. I worry as much on, and you're seeing it now slightly if you just see around Nepal, Bangladesh, Indonesia. You've seen some mini revolutions. United Kingdom, there have been protests on the street, because clearly when you see the Elon Musk and Sam Altmans of the world, the amount of money they are making versus the common man, there is a lot of resentment. So I do worry about social unrest also.
Now, if you come back to, let's say, India, and if you look at the macro optimism and versus the bottom up earnings, do you find some disconnect there?
Not so much, in the sense that I've always believed that this is not a earnings driven bull market. This is India's cost of equity coming down, so PE multiple expanding kind of bull market. As I said, India's top 100 companies ka earnings already have grown faster than nominal GDP last 5 years. So it's unlikely that next 3-5 years they will grow. And also with so much change, globally defense spending is picking up, technology is coming in. The top 100 companies are not where big growth is. So I don't see top 100 companies as a good reflection of India's economic vibrancy actually.
You also touch, and I think rightly said, your view on the at least small cap is little different than what the industry participants are saying. And if going by your views, one should have look at optimistically on the small cap side. Will you give us some filter data points? How do we filter if we need to look at the small cap funds?
Yeah.
What are those filters we need to look at, and then maybe shortlist those funds?
Yeah, so I should give a disclaimer here. I do think 60-70% of small caps are overvalued. But at the same time, because the number of stocks is 500-600, I think we need to find only 100 to make a difference for our AMC to create a good alpha. So I think good small cap funds, देखो, first of all, I think small cap investing is slightly different from rest. That you need to be more absolute return thinking rather than benchmark centric thinking. देखिए, let's say in a flexi cap or large cap fund, if Reliance is 6%, everyone will own 3-4% of Reliance. But that is not how you run a small cap fund, because for small caps, I don't think there's an index actually. So we see small cap index at sectoral level कि financials कितना है, IT कितना है, but we don't even see what stocks they are because it's such a fragmented index, right? 400 companies. So at least the way we think about small cap is we should buy stocks only if we feel the stock will double in 3 to 4 years. If it's not there, we sit on cash. Now, obviously, you try to fine tune it with some macro कि अगर रुपये डिप्रिशिएट होगा तो ये स्टॉक चल सकता है, रुपये अप्रिशिएट होगा तो ये स्टॉक चल सकता है. बट ब्रॉडली यू शुड जेन्युइनली फील कि ये स्टॉक 3 से 4 साल में डबल होगा, देन ओनली यू बाय. बिकॉज हमारा सिंपल फ्रेमवर्क ये है कि अगर मैं 10 साल का व्यू लूँ तो लार्ज और मिड कैप इंडेक्स 10% देंगे, स्मॉल कैप इंडेक्स 12-13% देंगे. If I buy a stock with the view कि ये डबल होना है 3 to 4 years, that is typically 18 to 24% annual return. अब मैं 10 स्टॉक लूंगा, उसमें 3 में रॉन्ग जाऊंगा, करेक्ट? तो 18 to 24 का मेरा ब्लेंडेड रिटर्न 15 से 20% आ जाएगा. Assuming my hit rate is certain, obviously less than 100. So I will still beat the small cap index. That is broadly a view. If I have to beat an index which is going 12-13, I have to be ambitious enough to say the stock will double in 3 to 4 years. Accept that 30 to 40% of the time I will go wrong, and then the blended return will come to 15-20%. Obviously, if my hit rate is higher or the stocks instead of doubling, some may quadruple also. So that will pull up the return, but that I think we'll see. But you need to at least have that mindset कि you should buy stocks with 3 to 4 years doubling kind of stuff.
Do you still feel that opportunity exists despite the
I think okay. So as I said, 60-70% look overvalued, which is why also we are sitting on slightly higher cash than normal. So usually we have 5-7% cash. We are 11-12% cash. So opportunities are not as high as 2 years back, but I don't think the opportunities are very less also. We see fair amount of opportunities where this kind of framework will work, I think.
I met one of the small cap fund manager, and one thing he told me that maybe 3-4 years back, when we used to look at small cap as a segment, the minimum return expectation was 100% up, like that sort of. Today, that has changed and it becomes a maximum expectation is 100%. Do you also echo with his thought?
वो है, देखो, as markets mature, see, first of all, what we are calling small cap, 15 years back used to be $300 million market cap. Now it's a $2 billion market cap. So yeah, to expect multi-bagger is not possible, I think. So yeah, I agree that the potential return in buying in distressed times, you felt कि 300 गुना 3 टाइम हो सकता है, 5 टाइम हो सकता है, वो मेरे ख्याल से आएगा नहीं. मतलब I think India obviously was a very undiscovered market 15-20 years back. Even domestic investors were not very active. Foreign investors looked at us as a small economy. Now things are more efficient now. There's so many different investors today. Whether it is MF, life insurance, ultra HNI, PMSAIF, foreign investors. So I don't think we will go back to the days where inefficiency was very high.
But do you still see, is there any undervalued, underowned, unloved sort of areas?
See, other view I have, no.
Yeah.
The easy winners again will not come back. What I mean to say is, today, if I have to take a bet on a AI cloud service company, it is not as visible as buying HDFC Bank in 2000 because things were very predictable in companies. As you move into more knowledge-based companies, things will never be as predictable as they were. But that is why I think it's good to diversify and buy 10 high-growth companies. There will be a accident in two or three of them, but because they are very knowledge based, like an internet platform, right? I mean, we've seen Zomato from bottom of 50 become 350. So we've seen a seven bagger in last 2 3 years only, right? So there are always opportunities, I think. But yes, the the business models are very complex today. It's not easy to just sit in a private bank and hope that you'll make money. I think those days are gone. Now you have to bet on some pharma product, you have to bet on some internet platform, you have to bet on some AI product. And it's not okay. The other thing that is also driving complexity is government policy is more active today. So if you see solar cell companies, they are being protected by the government. Now you have to take a call कि ये protection कब तक चलेगा because lot of the sectors are being driven by government policy, like defense. Bharat Electronics का margin 27 है, single client company. Now will it be 27? Who knows? But वो call लेना पड़ेगा मतलब.
So in this, maybe you may be meeting a lot of even the HNI, high HNI customers also. Is there any behavioral impact or behavioral change you have seen on the investor side in the last 3-4 years, and which worries you?
Not so much. In fact, I think the UHNI investors have become much more evolved. They are literally thinking like private equity. So a lot of them, actually, my finding is they are actually moving towards unlisted more today than by large companies. And obviously, when you move towards unlisted or micro caps, you need to have a 3-5 year time frame because liquidity to get out anyway will not be there. But at the other extreme are obviously the zero and grow and angel users who probably are very short termish. Like my CA was saying, I was filing my tax return, so my CA was saying, this year we are very busy because a lot of housewives have 500 pages of trades. so that is also happening. So that is what I worry more than the UHNIs who seem to be actually, they made so much money, the UHNIs, they are now become started private equity kind of thinking.
Is there any noticeable changes you did in your portfolio maybe in last couple of quarters?
No, clearly we have slowly kept trimming capital goods. So initially we did a bit of trimming on valuation, but more when you see the Trump's policies and the fact that, let's face it, even Indian government seems to be backing consumption now more than capex. I think we generally reduced capex plays versus increasing consumption plays. Also, we've been reducing IT a bit more because this AI impact seems closer than we think.
Is there any one money lessons you learned very hard way?
Oh, I keep learning very hard way only because unless you lose money, you don't learn. But yeah, I think more recently you could argue that let's say in our large and mid cap fund we should have reduced small caps last October, November. But I don't know. Sometimes these lessons work for 1 year, then they reverse next 2 years. But yeah, one thing I have realized is that mediocre managements or business models trading at, let's say, 20-30% valuation discount to the best company in the sector, that strategy is not working. Now you could say either market is not rewarding it or we are wrong. Maybe we are wrong, obviously. But what I'm saying is, let's say there is a real estate company at 1.5 times NAV, and you buy the stock at 0.8 NAV, which is not as good as that, but you think this gap is too much. That strategy has hurt us a lot recently.
So have you, what is your definition as a sound investing?
Honestly, I don't think value investing is very easy to do now, because just think about it. How, at what point would a value investor bought Nvidia? Because it would never be cheap. It would always be complex. So, especially with tech becoming bigger part of the market, I am not too sure how value investing will work. It will work in steel and cement, but they are becoming smaller and smaller part of the market. So I'm trying to compartmentalize my mind. For metal, cement, and all, I try to be contra. But nowadays, the bigger part of the market is tech, pharma. There, I don't think value investing works.
Are we also moving towards in the same direction how the US have moved today? US index is more tech heavy,
I am
less
of
financial.
the firm believer that, which is why I like innovation fund, because I think the Nasdaq equivalent universe of our market will outperform the rest of the market. Again, each specific stock may be very risky. That's why you need to diversify and manage your risk. But if you see, without internet platforms, our stock market also would not have done well last year, right? Without Eternal or Nika or whatever, right? Fortunately or unfortunately, we have to dive into this uncertain business models of tech and pharma products and all that.
Do you think the innovation like fund is maybe the SIP is the best route to take them into your account, or even?
Yeah, I'm a very big fan of the innovation fund. I think if you hold it for 10-20 years, you will make more money than Nifty 500. First of all, most of the capital intensive growth is behind us, I think. In the sense that if you see US post World War II, they had a built out of highways, ports and all. To me, that in India started in 1991 broadly when we opened up. But if you see, most of our national highways, electricity grid, YOY growth, the best is behind us. Now we'll still grow 5-10%, but that is not going to define the economy from here on, I think. So what will define the economy here on is all these knowledge-based sectors like internet, software products, cloud platforms.
But this again in small cap, even within the small cap index also, there is good amount of churn happens, right?
Yeah, big churn.
Big churns, right? And
that's why I think index dekhna hi nahi chahiye. So a lot of people ask me, small cap index earning this quarter was this. I say, boss, why do you waste your time? I mean, you have 500 companies. You will have Indian bank से लेके black buck, all very different businesses, right? I mean, there's no point collating 600 different businesses and looking at aggregate earning growth now.
One more question comes in: how much the portfolio drawdown should trigger a review in the strategy?
Again, I don't know if it can be absolute, because market drops 20%. If the fund goes down 18, it's okay. Okay, I'll tell you what I will worry if I were a distributor. One thing I worry about is houses where the top mid-cap position is more than 3 to 4% of AUM. This is an empirical rule I have developed. So, first of all, that is the symptom. The cause, I think, is if a house has very similar portfolios where all fund managers are thinking alike, that I worry about, because वो scalable नहीं रहता है. फिर क्या होता है, सब फंड्स में वही एक मिड कैप, वही एक स्मॉल कैप रहता है, and that becomes 3 to 4% of house AUM. Then that to me is a red flag. I think that is something, if I were to evaluate AMCs or funds, that is one thing I would watch out for, because if you see most of the AMCs which have shown very sharp outperformance and then dropped very sharply, this has been the common factor, I think.
So, how to identify a good fund manager? If You were as a distributor.
Very tricky. Uh, See, subjectively, one is anyone who talks of the successes all the time, I'm very cautious about. I like people who talk more about their mistakes because there is no fund manager out of 10 trades who's not gone wrong in 3 or 4 of them. I think virtually someone with, I don't know if you saw that Roger Federer video, right? I mean, if Federer can just win 54% of points, uh, I hate people who come and talk about the top 10 trades which have worked, right? Because I know that you're lying, right? So I think you need intellectual honesty, you need a passion for finding out things, and also a competitive streak because ultimately, like sports, we need to want to beat others. Sometimes too passive people who want to be nice, that also doesn't work, I think, unfortunately. At heart, you have to be waking in the night sometimes, thinking about a stock where you're going wrong, or if your fund is underperforming, you need to lose sleep a bit. You need to be passionate about this business.
Does age plays an important role in, at least in fund management industry? And both pros, cons, like it.
Obviously, age helps you, having gone through cycles, it helps you behaviorally.
Age or experience, probably. I don't know
Yeah.
what to use.
But see, I think 10, 15 years age gap doesn't matter. I've seen a lot of 35, 40-year-olds who are better than 50-year-olds. Maybe 30-year age gap matters in the sense I would rarely say someone who survived for, let's say, and is above 50 years is worse than someone who's 28, 30. That age gap typically matters because usually at 20 and 30 you've still not seen cycles, you've not seen the violence that can happen in markets. But between 35, 40, 40 and let's say 45, 50, I don't think age matters.
Is there any one personal finance habit you are still struggling?
I've said that where I have gone wrong early in my life is to buy too much of real estate. Well, I think generally India, my families feel very comfortable with tangible asset like real estate. But on the hindsight, that has been a very big drag on my net worth in one sense because last 15 years actually is almost negligible returns. But yeah, otherwise, see, I am slightly cynical of governments and money printing, so I've never held fixed income. I typically, apart from the PF money I have, which is fixed income, I am typically historically in real estate, but everything else I shift between either fully invested funds or hybrid funds. I don't own anything else actually.
So within hybrid, which scores better? Like BAV for a multi-assets, or both has a equal score, or maybe equity saving fund.
I just think like 100, 50, 25 in the sense multi-asset is somewhere in between. So if I'm very negative on the market, I go to BAF because BAF typically has international equities and domestic plus international will be 65, 70, whereas BAF can go down to 30, 40 also. Yeah, so it all depends where how much comfort you have with the market at that point of time. Other regret I have is this gold rally I missed a lot. So my logic for not being in gold was that generally if money printing is there, equities will do as well as gold. But I think with Trump and various other things, it is quite possible that we may see economic slowdown, but still gold doing well. But in an economic slowdown, equities will not do well, even though PE multiples may actually expand. But that's the new introspection I'm going through. so about a month back, I bought a bit of gold, although I hated myself for doing it at 3,500 or something. As of now, it looks okay on momentum. But buying gold after it almost doubled was a big hurdle for me. I felt very odd doing it actually.
what would be your recommendation now? If someone is having gold in their portfolio, should they hold? Should they trim?
No, having bought gold, I can't tell anyone to sell. Really, I think unfortunately, huge bullishness on equities I have to temper a bit now because let's face it, the world is so risky from a geopolitical sense that I think 10-15% of net worth being in gold or silver is required.
Is there any pivotal moment in your career as a fund manager which shaped your as a philosophy or as a strategy of your investment philosophy or strategy?
Difficult to think of one. Obviously, see, my first stint on buy side was in iPro, and I learned a lot from Naren because when you first go on the buy side, especially from a slightly theoretical framework, like I used to be a brokerage analyst advising others rather than buying stuff. So when you're doing advice, it's very theoretical, right? You're not getting hurt if things go wrong.
Correct.
So the thing about behavioral investing importance that I think iPro stint was very useful. Not any particular incident, but like in 2013, iPro did very well, if you remember, because generally the market that time was very bottom up focused. So if you go back to that time, Prashant Jain and Madhu Kela used to be the iconic CIOs. They would always talk bottom up, right? And that way, iPro was a bit different. That by that time, after the GFC, Naren had started developing a more liking or preference for macro investing than bottom up investing. And along with them, we also learned a lot. So I remember there was one interview by Sunil Singhania that said oil will go to 150, but stock market will go up. And we in iPro said was current account by that time was already 4% of GDP. He said, how can, if your current account is already 4% of GDP and oil goes up, the rupee will go for a toss and all that. So market that time was mostly bottom up. We were more macro driven, and that was, I think, a good learning that time.
So when you took the name of Prashant and Madhu Kela, so if let's say suppose if any star fund managers leaves, like for any organization, do you think we should take a exit call maybe immediately, or should we wait and watch and look at how that transition is going on?
It all depends on the team, which is why I see this. If all the schemes are run very differently, I am more at comfort. If the house has all the schemes having the same stock, which typically means the CIO's thinking is very dominant, then I would quit the scheme. Then.
So if people who are in 30s and people who are in 50s, and if they want to design a SIP strategy, will there be any different in your opinion?
Yeah, surely. I mean, I think people above 50 should have slightly more debt than people in 30s because the longer the time frame, I guess you should have more equity, right?
But I'm talking about on the SIP strategy basically. If someone chooses the SIP.
Yeah, but still, I mean, see, SIPs give you timing over 1 or 2 years, but when you're looking at asset allocation from a 10-20 year viewpoint, I would think that as your age goes up, debt needs to go up a bit because you need certainty because you will be withdrawing that cash to fund your retirement.
I think you have almost more than 3 decades of experience. Now you are managing a large team also. Is there any advice would you like to share with our leaders, team leaders, which you think one should look at those things and which had worked for you?
So whether work or not, basically I'm very output centric. I have over time realized that if you've recruited the wrong person, monitoring them 24/7 is a very suboptimal way of spending your life. So either you take the hard call if it's not working of parting ways, or just give them the best inputs, give them the best environment, give them the best culture, and just hold them accountable to the results. Obviously, if the environment is bad, you can adjust your expectation on the results, but I don't believe in micromanagement. I don't believe in measuring inputs, ki how many hours were in office, how many annual reports you read, how many meetings you did. I Over time I've realized that maybe see a lot of management practices are very specific to the department. It may not work in ops and HR, right? But at least in investing, I keep making this analogy of sports and investing that at test level, you can't tell Rohit Sharma or Virat Kohli your cover drive ka your elbow position is not right. By the time he is beyond all that, right? You can only give them a good environment, good nets practice, and hope that they work. If they don't work, you part ways. That's the way it goes.
Any advice people like us who are the custodians of the client's wealth, what would be your advice to us?
I think the basics are always the same, that we have to be disciplined. I think greed and fear drive all of us. I'm sure today everyone wants to buy gold. Everyone wants to make it 50% of their portfolio. Try to control them, try to keep it at a sane level. I think that's the basic thing.
This one may be a little personal. I learned from Amit that your both daughter now went to US and they're studying. So any parental advice, a lot of the parents are here. So maybe anything which had maybe worked as a parent, and maybe some of things may not work, but one or two parenting advice.
Again, very difficult because I don't know if I've been a good parent or a bad parent. But I, rather than advice, I really feel.
Amit told that your daughter is a scholar, so, so with that.
No, I think the best thing you want to see in kids is, I keep telling them that find a strong calling, because I genuinely believe that whatever way we define success is an output. One of my favorite movies is Three Idiots, right? I mean, I think that philosophy I resonate with a lot. Ki, first of all, today as a parent, frankly, I have no clue in 20 years which occupation will make you rich. Because all this AI coming, like 20 years back, people thought Java coding was very hot, right? And we all know how it's turning out now. So I have no visibility about what occupation will be easy to do or will make the kid rich. But I do keep saying that you need to find something you're passionate about. Rest, everything will follow. So only thing I would try to tell my kids is wake up with a feeling, wanting to do something, rather than saying this will give me a salary or give me financial security.
I will not do justice. There are a lot of Gen Z and Gen Alphas are there. So if I don't ask that, then they will ill on me. So maybe any advice to Gen Zs, how they can use their time, or maybe anything which comes in your mind, or it's generally your observations are there, what they cannot do, what they can do, which maybe might
I
help
think
them.
same as parent, that boss, reduce screen time. Don't spend so much time on WhatsApp and taking pictures. Not that it's bad, but I do think that self introspection, I think, is very important in life. I meditated a lot also, and I think it's good to slow down things and just look inward.
We are echoing your thoughts. I think innovation is in our scheme of things. Like your BAP multi-asset is our scheme of things, and I think we follow. Like I think many a times when we come and we met also in person, I think you get a lot of inputs at the same time. So really appreciate. Thank you. Thank you
Thanks
very
a
much.
lot.